Welcome to another video here at FiscalVoyage. I'm Felix, and I'm sure you guys all heard of the news of the Pfizer vaccine for the virus that's going out, and this vaccine is over 90% effective. So we're gonna look at that article or the news that came out, and this news increased the stock market up 3%, 5%, and there's some stocks in my portfolio, for example, has jumped almost 10 to 15%. But even in this increase in the market, there still presents good buying opportunities in today's market. So we're going to look at 4 different stocks that presents good buying opportunity, and some of these stocks I already covered, but still present good buying opportunity even at today's price and the fact that the market increased 5%, 6%. But before we get started, if you're new to the channel, make sure to hit that subscribe button, and if you like to make money, hit that like button as well. So let's get started. So you can see here on November 9th, Monday, I'm sure you guys heard of the news of the vaccine. Pfizer and BioNTech has the vaccine, 90% effective. So right now they're just waiting for FDA approval. You can see here the first interim efficiency analysis of a large-scale phase 2/3 clinical trial evaluation of Pfizer and BioNTech's COVID vaccine candidate showed a more than 90% effective 7 days after the second dose in preventing infection in participants with no evidence of prior SARS-CoV-2 infection. So this is very promising news. So this definitely drove the stock market up since Monday. So you can see here, here's the S&P 500 index. You can see on November 6th, which was Friday, and then November 9th, when the news came out, you can see here the stock jumped 2.87% for the Monday, and then it's been coming down. As you can see here on November 10th, it was down a little bit, but today is up slightly, and yesterday was up slightly. But overall, this was tremendous news, and we're going to look at 4 different stocks that, even though they were up these past few days, it still presents good buying opportunity because of the valuation. So the first stock I want to talk about is Lockheed Martin Corporation, ticker symbol LMT, and you can see here is up slightly, 1.37% since November 9th. And we're going to look at fast graph for Lockheed Martin. First, we're going to look at Lockheed Martin 20-year earnings growth. You can see here the company has a great history of earnings growth. There's been a few years of negative growth in 2003 and 2011, but overall, very solid company. And the company, or the market, likes to evaluate this company about a 17.4 multiple in the 20-year period, but if we shorten this to a 5-year period, you can see the market likes to give it about a 19 multiple. And currently, the company, Lockheed Martin, is going for 15, so it presents a very good buying opportunity right now. You can see here you could have a projected total annual return about 20%, which is include capital appreciation and dividend. The dividend yield is solid at 2.8, earnings yield is solid at 6.5, S&P credit rating of A-, and the long-term debt to cap is pretty high, but it is a capital-intensive company or industry. But overall, Lockheed Martin looks very attractive at today's price. The next stock I want to look at here is Walgreens Boots Alliance, ticker symbol WBA. You can see here it's going for $41.59. And on Monday news, you can see here the stock jumped pretty big, actually, 4.5% increase. And we're going to look at fast graph to see if it still presents a good buying opportunity. First, we look at the company overall. You can see here Walgreens has been growing earnings as well very nicely. There's been a year in 2009 where earnings was down -5%, and in most recent year 2020 it dropped 21%. So that's what really brought the price down tremendously over the years, because people were seeing flat earnings in 2019. And it's a lot of bad news for Walgreens. So that's what caused the in COVID and things like that caused the earnings to drop 21% for this year. But because of that, it presents good buying opportunity. So if you can see here, we're showing this time period. The market tends to value this company about 11 or 12 PE, and right now it has an 8.9 PE. And because of that, it gives you a good buying opportunity where you could have a 20% plus annual rate of return for the foreseeable future, and you get a very solid dividend yield of 4.42%. The company is BBB plus credit rating, which is investment grade. Long-term debt to cap is slightly high over my criteria, about 50%, but still manageable. That's why they have a good credit score. But overall, you can see here it is lower than the orange line and the blue lines, and it presents a good buying opportunity. Solid company. They actually increased the dividend earlier this year, I think about 2 or 3%. But the dividend is well covered, and the company looks to be undervalued based on yesterday's closing price. So that's very positive news. You can see there total annual rate of return about 21%. So Walgreens does present an attractive buying opportunity, even though it's jumped. You can see here since last month it jumped over almost 24%. So even in this increase in price, it still presents a good buying opportunity in my opinion. And the third stock, Bristol Myers Squibb, also had a nice pop. You can see here November 9th, it's up slightly, or it was up yesterday 69%, but over the week, you can see here on October, it's jumped very nicely, almost 10%. Even though it's up 10% since the end of October, it still presents a good buying opportunity. If you look at the fast graph here. So Bristol Myers fast graph doesn't look as attractive as some of the other ones. Most recently, the past few years, earnings has finally been growing. You can see here 41%, 6%, 32%, 18%, 35% for this year is what's expected. But you can see here from 2012 or 11, it has some few years of negative earnings or flat earnings. So that's wasn't positive. So that's what's causing the price of this company kind of stay there, but it did pick up, and that was overvalued here, and then started to revert back to its mean. And right now, it looks like it presents a good buying opportunity. So if we look at the 5-year graph here, you can see right now the dividend yield is decent at 2.79, but the valuation is what makes this company so attractive. If it reverted back to its mean of about 18 PE or even 15 PE, you could have a nice 25 plus annual rate of return for the next few years with a decent dividend and a growing dividend at that. A plus credit rating, so it's a good quality investment grade company. Low long-term debt to cap ratio. Earnings yield looks very attractive at 9.5. So overall, Bristol Myers looks very attractive, even though it jumped 10% or so the past few days. So even because of that jump, it still presents a good buying opportunity. And the fourth one, British American Tobacco. You can see here on November 9th to now, it jumped almost 10%. It's up today as well. So that's very positive news for British American Tobacco, ticker symbol BTI. We're going to look at the fast graph for this company. You can see here earnings had some negative years in 2014, 15, and 16. There were some down years there and a flat year in 2016. But in 2017, picked up very nicely. And then analysts are expecting this decent earnings growth, about 3% for this year, 7% for 2021, and 7% in 2022. But overall, if we look at the price for this company, you can see it tends to value, or the market tends to value at about a 13 to 14 PE. And right now it has a PE around 8. So that presents good valuation. And not only the valuation looks good, but this dividend looks very attractive at 7.4%. It looks to be very safe as well with the earnings covering the dividend. And if the company will revert back to its mean of around 15, you can see here you can have a total annual rate of return of about 45. And we're showing this graph here. Even if the company, like you see here, reverts back to the 15 5-year PE ratio average, it's very attractive here. PE at 8.38. It presents a good buying opportunity. You can see here, this is when I bought shares. And like I said, it's up 10% since the week, but still presents a good buying opportunity because of the valuation, the dividend yield, BBB plus credit rating. So overall, solid company, low, decent long-term debt to cap ratio. British American Tobacco, high quality company at attractive valuation. So there you have it. Those are my 4 stocks that present very good buying opportunity right now. Make sure you do your own research on each of these stocks before you actually buy shares. But the valuation looks very attractive for these companies. I personally own shares of these companies, and if I had some money right now, I would definitely buy more shares. But overall, these are solid companies good dividends. They're dividend growers, been growing dividends for a lot of years. So overall, solid companies, and there are a lot more other companies that are attractive right now as well. I'm not gonna cover them in this video, but let me know in the comments what other companies you think are attractive right now and should other people should be looking into. So thank you for watching, and I'll see you guys in the next video. Again, if you're new to this channel, make sure to hit that subscribe button, and if you like to make money, hit that like button. So I'll see you guys in the next one.